If you're a creative business owner and you want to pay as little tax as possible, then you need to watch this video. Why? Because I'm going to show you one strategy that if only I'd known it sooner, would have saved me over $22,000 in taxes and gotten me a ton of free gear. So let's get into it today and hit that intro. Alright guys, if you're anything like me, owning a creative business is really fun, but it can be a little bit challenging figuring out the finances, specifically how you should be structuring things, how you should be writing things off. And while this video is not tax or financial advice at all, I will share my lessons learned along the way and give you some strategies that you can look into using for yourself that hopefully will save you a lot of time, energy, and money. So if you have a creative business, you probably already know that you can buy gear and actually write it off on your taxes. So if I buy a new camera or a new lens, I can write that off on my tax return and say, hey, I needed this gear in order to do my business. Therefore, government, please don't tax me on this part of my income because I spent it on gear for the business. And that's one of the real perks of having a business. You can write off all sorts of things and get money back, pay way less tax. The way that you buy and sell the gear and when you do that is actually going to make a big difference in how much tax you save and how much money you save when you're buying and selling gear. So let's walk through 3 different scenarios to show you what I mean. Scenario number 1 is the creative business owner who buys gear and just keeps it forever. You use it until it is absolutely broken and you throw it in the garbage afterwards. Okay? Scenario number 2 is a different strategy. It's the creative business owner who buys gear and they upgrade eventually, but they want to get their money's worth. They don't need to be in a rush. They're conservative and they're responsible and they wait until they really need to upgrade before they upgrade. And then there's scenario 3, the creative business owner who upgrades as soon as the new model of camera or lens or phone comes out right away, right? So we've got scenario 1, the keep it forever. We've got scenario number 2, the upgrades eventually. And then we've got scenario number 3, I need the new model right away. I want you in the comments right now to write down which one you are and which one you think is going to make the most sense when it comes to your taxes and to your finances. So to keep it simple, we're going to look at buying a new iPhone, and we're going to say that iPhone costs $1,000. It may be more, maybe less, but this just makes the numbers a lot easier. So in scenario number 1, we buy a brand new iPhone for $1,000, and then we can write off $1,000 worth of income on our taxes. That's pretty cool. That's pretty good. Now, depending on where you are and how much money you made that year, you're going to get a different amount of tax savings from that deduction. But let's just say, for the sake of keeping it simple, that's going to represent around $350 in tax saved by buying that new iPhone and writing it off. Okay, cool. So at the end of the day, you crunch all of those numbers, you put it together and you say, okay, I bought the iPhone for $1,000. I saved $350 from taxes, and that iPhone in the end cost me $650. Pretty good. And you use that iPhone for 3-4 years and it winds up costing you $650, maybe $150 a year. Scenario number 2, let's take a look. You buy it and you upgrade eventually. So in this scenario, you don't use the iPhone until it completely breaks. You're going to resell it at the end. So we got the same $1,000 iPhone, that same $1,000 tax deduction, the same $350 savings, but this time we're going to sell it. And let's assume it's a few years later, so you're selling the iPhone and it's now maybe worth $300 you can get for it. You got a pretty good price. Okay, instead of being $650 that was your total cost for the iPhone, the total cost now comes down to $350. Seeing where this is going? So this is interesting. Scenario number 1 so far cost us $650. Scenario number 2 cost us $350. That's half as much, but we actually upgraded a little bit sooner. Okay, now let's look at scenario number 3, the person who upgrades every single model. I want you in the comments below to take a guess. What do you think is going to be the results of this experiment? First off, we're going to start off with the same data, the same $1,000 iPhone, $1,000 tax deduction, $350 in savings, but this time, because we're selling it the next model year, the iPhone 16 just came out, and we're selling our iPhone 15 on the day the 16 is released. So we're assuming maybe a $600 resale value on that $1,000 phone. All right. If we do the math on all of this, what that comes out to is a total cost of only $50 for the phone. So in scenario 1, where we held onto it forever, it cost us $650. In scenario 2, where we held onto it for a couple of years and sold it, it cost us $350. And what's crazy is scenario number 3 only cost us $50, and we're upgrading phones every single year. Do you see how weird that is? How backwards and crazy? And when I realized this, when I actually looked at the numbers on paper, my mind was kind of blown because I've been wasting so much money doing what I thought was the responsible thing by not buying the new gear, by putting it off. When in reality, if your tax bracket is high enough, you're actually getting these savings, you're going to see it makes a lot more sense oftentimes to do the upgrade. That's crazy, right? So this strategy does not always work. You have to make sure that whatever item you're buying, you can actually resell at a decent price. However, oftentimes it does. And the key is in your business, you actually have to treat it like a business and look at the numbers and don't just assume based on what you've been taught is responsible or the right thing to do. And when you actually sit down, you look at all the gear and all the different purchases you could be making, it's possible when you run these numbers, you could be saving a lot more money than you currently are by buying and holding on forever. The key here is you don't want to guess. You don't assume. You actually sit down and you look at the numbers, and that alone will make a massive difference for you in your business. Let's take a look at one more example just so you can see that this isn't just limited to phones. Let's look at a brand new camera, the Sony a7 IV. We really want to upgrade our video game, make better videos, so we're going to buy this brand new camera. Let's look at the numbers. It was originally released for $2,500 US. You could buy it brand new for $2,500, and you can see that today I can get it on sale for $22.98. So let's say we get a great deal, we're bargain hunters, and we find this camera on sale brand new from B&H for $22.98. All right, we plug that into our taxes, and we say, okay, we're going to reduce our income by $22.98, which results in savings of around $800. That's assuming you're in the 35% tax bracket, and you have to figure this out for yourself based on how much money you're making. I'll explain this in a little bit later, okay? Now let's look at how much you can get this camera for used right now if we were to sell this down the road. Currently, you can get anywhere from $1,800 to $2,000 by selling this camera used. All right, let's plug this into our numbers. We've got the $22.98 new price, tax deductions of $800. We've got an $1,800 current resale price because we're going to go with the lowest of those prices we saw. Your total cost for this camera, if you bought it and then you sold it for $1,800, would actually be negative $306. You'd be making money by buying this camera new and selling it on Facebook Marketplace later when you factor in the tax savings. And that's the key here. You have to be saving on the tax, and we'll talk about that in a second. You can see here that if we take it a step further, you can even put it on a credit card and get 2% cash back. And if you find a credit card that actually has a minimum spend sign-up bonus, you could probably put it on there and get another $200 credit card bonus if you're in the States and you have those kind of programs available to you. So the crazy part is when you actually look at all of these numbers, the total cost to buy this camera upfront, $22.98. But the total cost of ownership after we sell it and take advantage of all these bonuses, credit cards, whatever, we could potentially be getting this camera and making $552 in the process. Isn't that insane? So much different than if we just bought this camera for $22.98, used it for 10 years, and then had to throw it in the garbage because nobody wants it anymore. So it's a different way of looking at things when you can actually incorporate this into your tax strategy rather than just buy and use it for as long as possible. So by now, you're probably getting pretty excited about this technique, and if that's the case, leave it in the comments below. Let me know. Did you know about this before? I would love to hear. Let's have a conversation. Now, let's talk about a few caveats, who this is for and who this is not for, because how do you know if this is for you? Well, it's for you if you make enough money right now to be in a higher tax bracket. So if you don't totally understand how higher tax brackets work, it's basically like this. The government taxes people on a sliding scale depending on how much they make. So the first 15 grand you make gets taxed at, say, 10%. The next 20 grand might get taxed at 20%. The next 15 grand might be taxed at 25%. And the more you make, the more of that money gets taxed. And so in order for this to actually be effective, you have to be in a higher tax bracket so that it's saving you more money. Because if I'm paying 50% tax and I can reduce it by $1,000, well, then I'm going to save $500 in tax. But if I'm only paying 10% tax and I reduce it by $1,000, well, then I'm only going to save $100 in tax. Does that make sense? The second requirement is you need to have cash and you need to not need it right away. That's because you're going to put a lot of money into this new camera or lens or phone, and you're not actually going to see that back until after you sell that phone and get the tax return. So that is thing number 2. And the third requirement is you have to actually be able to justify using this tool in your business. So if you're a photographer, buying a massage chair and writing it off is just not going to work. So you need to kind of exercise some common sense here and make sure that it applies to your business before you try and apply this strategy, or you're going to get in trouble. All right? Now, don't do this if, 1, you pay very little tax. Obviously, if you're not making much, this strategy is not going to work for you because it's really not going to have the same amount of savings. Number 2, if you don't have cash and you have to put it on a credit card, do not do this strategy because you're going to wind up paying more in interest on that credit card than you're going to save on the tax return, and it's going to add a ton of stress to your life. And number 3, don't do this if the gear or item isn't a reasonable business expense. And by that, I mean it has to be a reasonable price considering what other people in your industry are spending, and it has to be a piece of gear that actually is relevant to your business. Otherwise, you can't write it off. Now, there are loopholes to this. For example, if you have a photography channel on YouTube and you buy a product and you do a product review, it doesn't matter what kind of product it is because you're creating a review around that product, you can write off 100%. So at the end of the day, you do need to look up your own specific tax information based on where you live and the items that you're trying to deduct and your specific business. However, I hope this opens your eyes to the potential here to actually structure your taxes in a way that not only gets you gear for free, but saves you a lot of money. So if this video brought you some value, do me a favor. Can you leave a comment below, hit that thumbs up, and subscribe if you want more content like this? Thanks for watching, and I will see you in the next video. In the meantime, create something awesome. Peace.